Stocks took a nosedive today after the Federal Reserve raised its key interest rate. Nightside's Virginia Huey has more.
U.S. stocks sank Wednesday in a wild session after the Federal Reserve raised interest rates for the fourth time this year. The Dow Jones Industrial Average plunged 351 points and fell to an 18-month low because of it. Fed Chairman Jerome Powell said the interest rate hike was necessary to keep the U.S. economy thriving.
Despite this robust economic backdrop and our expectation for healthy growth, we have seen developments that may signal some softening relative to what we were expecting a few months ago.
The Fed lifted its key interest rate up a quarter point to a range between 2.25 and 2.5%, ignoring President Trump's public calls to keep rates steady. The president has criticized the Fed and Powell, blaming the rate hikes for undercutting his efforts to boost the economy. He tweeted this week that the Fed should not, quote, make yet another mistake.
He's been very clear about what his position is, while at the same time he understands that the Fed is an independent agency. That doesn't take away the president's right to state his opinion on a particular matter.
Rate hikes are meant to keep inflation in check, but higher rates do make it more expensive for consumers and businesses to borrow money from the bank or on their credit cards.
Consumers are going to be paying a higher rate. Just because we're getting a quarter-point interest rate from the Fed doesn't mean that credit cards are only going to raise by 1/4 of a point. Quite contrary, it's a reason for the credit card companies to, say, point to the higher interest rates and look to increase the rates significantly higher.
Now, financial experts say higher interest rates will also make it more expensive for home buyers to get a mortgage. It could also hurt some sellers who may have to consider dropping their price. The Fed has indicated 2 more rate hikes will come in the new year. Mason.